A big energy relief package set to be the centrepiece of tomorrow night's budget. Home buyers ignore last week's rate rise and push auction clearance rates to their highest level in more than a year. And Macquarie Group pays one of its stars $57.6 million for 1 year's work. It's Monday, the 8th of May, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
After the show, Sean, you have a really good chat with Matthew Kidman, and we speak to Matthew quite often from Centennial Asset Management. He is always worth listening to, particularly if you're an investor.
Yes, sure is, Michael. We talk about investing in banks to begin with, but then we also talk about investing when the rate cycle's peaking, which looks like to be the case. Matthew, as always, plenty of good ideas about investing. Of course, it's not investment advice because you need to take into account your own personal circumstances in that instance, but well worth a listen if you are interested in investing.
Yeah, it just gives you plenty to think about, really. The main story this morning, Sean, Federal Treasurer Jim Chalmers will deliver his first full budget tomorrow night with the cost of living a focus and suggestions over the weekend that the budget this year could even be in surplus.
That would be pretty amazing if that's the case, and it would very much reflect much higher mining taxes and lower unemployment benefit payments. As you say, Michael, cost of living will be front and centre, including up to $3 billion in money to provide power bill relief and tax deductions for small and medium-sized businesses investing in energy equipment. Chalmers yesterday said pensioners and small businesses will be getting several $100s in energy relief. Let's hope so. There'll be plenty of spending in health, money to take pressure off the hospital system, money to fund the fight against vaping, changes to pharmacy dispensing rules, and a big wage rise for aged care workers. In welfare, over 55-year-olds are likely to receive an increase in unemployment and rental assistance payments, and it's possible job seeker payments across the board could rise. There's money to keep people in the defence forces, but some projects will be cut back. There's changing to the taxing of super balances over $3 billion, more money for childcare, money for infrastructure payments. There'll be a lot more around the green economy. Plenty going on, Michael.
As always, Sean, plenty is known ahead of time. The weeks before budget time is kind of littered with leaks. But what are the big unknowns still?
Well, will the government do anything about stage 3 tax cuts already legislated? I suspect not. Chalmers more or less said that yesterday. There's some tax reform we know about, an overhaul of the petroleum resource rent tax, for example, but probably not too much around capital gains tax or income tax. The tax side is critical because we don't want a budget that gets too generous. Otherwise, we're going to end up with much higher interest rates. So what they do around tax, we don't know a lot about, but that'll be really, really important. Will the 2023 fiscal balance be a surplus on the back of much higher mining taxes? That's a great question. Now, Jim Chalmers yesterday misspoke somewhat. He called the budget balance a surplus, then he corrected himself. Doesn't mean it's going to be a surplus, but if it is a surplus, that would be for the current financial year, 2023. That's likely to be a one-off. So next year, it'll be back in deficit if that's the case. Always interesting in what the economic projections are, inflation, labour market, household spending. What about the national debt? How big will it be? What will our interest payments in the future be? Now, we know interest payments and the National Disability Insurance Scheme are set to be the two biggest spending items in the budget. We find everything out tomorrow night, Michael.
It's going to be very exciting. And we'll have a special episode on Wednesday morning with our regular budget correspondent, really, Stephen Koukoulas, our resident economist. You can hear him today for the week ahead, but we'll have a special interview with him on Wednesday morning as well to go through the bits and pieces that we didn't know about.
That's exactly right.
Yeah, we are in for a big week, Sean. How did local markets end on Friday?
The S&P ASX 200 finished the week at 7,220 points, up 0.4% on the day and down 1.2% for the week. Fears over a crisis among US regional banks and a recession in the world's largest economy dictated sentiment. That was basically all week. Now, that changed over the weekend, which I'll tell you about shortly. It was a really strong week last week for gold stocks. Investors worried about financials, were looking for safety. Stocks like Ramelius Mining, Evolution, Newcrest, Goldred, and Northern Star, they all did very well on Friday. Property stocks also did well on Friday. Goodman Group, Stockland, Scentre Group and Dexus all rallied. Wasn't such a good day for the coal miners. Coronado Global, Whitehaven, New Hope were among the worst performers.
And what about international markets? What happened over the weekend?
It was actually a really strong weekend for Wall Street. We haven't had many strong days in the US recently, but strong jobs data alleviated fears of a recession in the world's biggest economy. Also, nervousness around the US banking system subsided somewhat. That triggered a big jump in bank share prices. Now, Pacific West, that's the regional bank that's looking for a buyer, it lost 70% of its value last week. And then on Friday, it was up 80%. Amazing how much it's jumping around. Overall, the S&P 500 and tech-heavy NASDAQ rallied around 2% over the weekend. Better than expected quarterly earnings from Apple also helped push the market higher. The renewed confidence in the US economy pushed up commodity prices. Brent crude jumped about 4%. Gold prices dropped, not surprising. That's the flight to quality, which is somewhat undone when confidence comes back. And Michael, the Aussie dollar starts the week at around 67.5 US cents.
Okay, we'll be back in a moment with the rest of the day's business news. Sean, auction clearance rates hit a 12-month high over the weekend, which is quite remarkable because it seems that buyers are pretty unconcerned about the 25 basis point rise in rates last week.
I think it's totally remarkable. I mean, the combined capital cities preliminary clearance rate came in at 75.1%, according to CoreLogic. That's the highest figure since February last year.
This is why I'm glad I don't make predictions. Because if you had asked me on Friday how it was going to go over the weekend, I would have said, in a word, dismally.
Yeah, it's remarkable. I mean, I suppose people want to buy. The thing at the moment is there's just not much supply on the market, so that's helping push up prices. But 75%. I mean, last year was 62%. Like the same weekend last year was 62%. It's quite incredible. I mean, Melbourne held the most number of auctions, 732, and it recorded a clearance rate of 76%. Sydney held 650 auctions, 78.5% clearance rate. Amazing. Adelaide was at 72%. Brisbane, 68%, which is very good for that city. Canberra, 66%. Certainly they weren't affected by the rate rise last week. I think that undersupply of housing at the moment is overriding everything else.
Maybe it's just me then. Maybe I just get startled, spooked easily. I'm like a gazelle. Like if I see my shadow out of the corner of my eye, I'm just suddenly just springing. I'm across the savannah, kind of just bouncing away. Sean, the Reserve Bank has downgraded its inflation forecasts and expects the economy to be weaker this year and then experience a stronger recovery than anticipated in 2024. But it's also warned that rates could still rise.
Yes, in its quarterly economic update released on Friday, the central bank said some further tightening of monetary policy might be needed depending on how the economy evolves. It released new economic forecasts saying its preferred trimmed mean inflation reading will be around 6% by the middle of this year and 4% by the end of the year. It thinks economic growth for this calendar year will come in at 1.2%. That's very low. But then the growth rate will rise to double that level by mid-2025. It also weighed into the debate about who is winning from corporate profits. Is it the workers or is it shareholders? The Reserve Bank said that outside the mining sector, wages and profits were growing about the same pace proportionally, i.e., neither side was particularly winning outside the mining sector, that is. The Reserve Bank warned rents will further climb because of the growing population and a shortfall in housing supply, with dwelling investment falling 4% in the calendar year 2022. And again, it warned of the need to improve labour productivity.
Now, how about this one, Sean? Macquarie Group has reported a record $5.2 billion profit, helped by rising interest rates and volatility in commodity prices.
Australia's seventh largest listed company is now well and truly a global business, with more than 70% of earnings coming from offshore. The bank will pay out a slightly lower than expected dividend, and its share price finished down just a bit on Friday. Chief Executive Shamara Wickramanayaka said she was cautious about the outlook. She always is, but the group is ready to capitalise on the right opportunities for growth. The big earner was the tradings business, which mostly helps serve customers to manage risk in financial markets.
And Sean, with full year results comes annual remuneration. I mentioned this one at the top of the show. The top paid executive at Macquarie wasn't actually the CEO, but rather Nick O'Kane, who leads the group's commodities and markets business, and he made $57.6 million.
Eye-watering. How can anyone be worth $57.6 million?
I reckon I could spend it pretty easily.
Oh, I don't ever think you could. 57 point. I mean, if you're not going to buy a house, what are you going to do with 57.6?
I mean, that's probably what I would do. I mean, I would like a little bit of kind of waterfront property.
Yeah, it would be a nice one. I mean, just amazing. O'Kane's area of the bank showed a 50% jump in net profit, and that was pretty much the result of Russia's invasion of Ukraine. That sent energy prices sky high. Obviously, he is remunerated on results, at least to some extent. Last year, he made 36.2 million. This year, 57.6 million. Really? I don't know. The chief executive, Shamara Wickramanayake, earned $32.8 million over the year. Unbelievable, isn't it? And actually, while on the subject of executive remuneration, the new Qantas boss, Vanessa Hudson, will receive a base rate of $1.6 million when she starts the role later this year. Her take-home pay could reach up to $5.8 million, dependent on the group meeting operational and share price targets. She'll also be entitled to 4 long-haul and 12 short-haul trips each calendar year. Great. Let's say she does really well and she makes $6 million. Shamara Wickramanayake, CEO of Macquarie, makes $32 million. There you go.
Yeah, but does she get 4 long-haul trips a year?
No, very true.
See, it's the detail, Sean.
And 12 short hauls. Very exciting.
Sean, ANZ boss Shane Elliott reckons competition in retail banking is as intense as it has ever been in Australia and New Zealand. He made these comments on Friday after the bank reported a record $3.8 billion half-year cash profit.
Elliott said the next 6 months is going to be even harder. The profit for the half year to the end of March was on expectations, though Australia's 4th largest bank paid a slightly higher than expected dividend. Its share price jumped about 1.5% on Friday. ANZ expanded its all-important net interest margin, though most market watchers think profits, or at least profit margins, have peaked. The strongest performer was its institutional business, and its commercial business did well. After losing market share last year, ANZ competed hard in the home lending market over the past 6 months. It won back some of that market share. Notably, it lifted its credit impairment charge, and Elliott said, there are signs of stress in the mortgage market, but, and I quote, you have to squint to see them. Pretty good news all around, really. Apart from those profit margins, everything else looking okay.
Now, law firm Slater & Gordon has launched legal action against Medibank on behalf of customers whose personal information was compromised in a massive data breach last year.
The case is the latest class action to hit the health insurance giant after close to 10 million customers had private details exposed in October. The statement of claim filed in the federal court alleges Medibank and its subsidiary Australian Health Management breached privacy and consumer laws as well as data retention legislation. Members of the class action are seeking compensation for losses, including time and money spent replacing identity documents. Be a fair bit in that, I reckon, Michael. The time spent replacing documents. Oof.
Oh, it is the slowest thing in the, it just, if you have been a victim of one of these, it just takes so long, especially when you have to get on the phone to the ATO and others. Mm-hmm. Speaking from a certain amount of experience, actually, it is very...
Yes, I know you do have experience in this. By the way, they're also, I don't know whether you're a member of this class action, I'm assuming not, but they're also seeking damages for non-economic losses like distress, frustration and disappointment. Talking your language.
Yeah, that's what I experience most days working with you, Sean. Oh, sorry, that felt, it was a cheap shot.
I'm just going to ignore and be above that sort of trashy commentary. And off we go.
Fine, let's move on. I tell you, the banks are generating a few headlines at the moment because Westpac is facing a test case over excessive work hours as a senior manager claims he's owed more than, about this for a bit of back pay, $300,000 in back pay and damages for working up to 100-hour weeks and up to 32 days straight.
The former senior manager from the bank's group finance team launched federal court circuit action last fortnight, alleging Westpac ignored understaffing concerns and extreme hours and breach of the Fair Work Act's maximum hours protections. This is according to the Financial Review. It ended up with harmful consequences for his health and family relationships, he claims. The case follows the finance sector union launching its own excessive hours test case against National Australia Bank this year. That's expected to have ramifications for the rest of the big four banks. The Westpac case differs from the NAB case somewhat in that the former manager alleges that all his hours were reviewed and approved by the bank's group financial controller and then formally recorded in the human resources system. It'll be a very interesting one to watch.
Oh, sure will. Now, the Albanese government will establish a national net zero authority and devote $400 million from its Powering the Regions fund to help workers, communities and investors manage the transition to a low-carbon economy.
I think this is really important because we talk a lot about the need to transition to a low-carbon economy, but there are a lot of people out there who work in fossil fuel companies who are going to be displaced. And this is what this is all about. Now, unions and businesses have called for a more coordinated approach to shifting towards renewables, including what it means for individuals, for communities, for towns that rely on fossil fuel mining. Prime Minister Anthony Albanese said the authority will have responsibility for promoting the orderly and positive economic transformation associated with achieving net zero emissions. Australia has committed to cutting emissions by 43% on 2005 levels by 2030, on the way to cutting emissions to net zero by 2050.
Now, finally, Sean, before we get to international news, there's a bit of good news on the garbage truck front. Just not really a sentence that I expect to say too often. But a few weeks ago, I told you about how Cleanaway, which is the country's largest waste management group, was getting its white-collar workers to drive trucks. All the managers were getting behind the wheel. Now it's found a better solution, probably a pretty logical one: train female drivers.
Yes, Cleanaway Chief Executive Mark Schubert said a female driver academy set up by the company in early 2022 has helped alleviate the shortfall, and he expects the increase in migration will also add new drivers. Cleanaway has managed to fill between 20 and 30 vacancies a month across its business, mainly in metropolitan Sydney and Melbourne. Now, the group has 166 female waste collection truck drivers out of a total of 2,600. Of course, it's a massive company. It's got contracts with 130 local councils, 150,000 business customers. It runs 5,000 trucks collecting waste across Australia, and they've realised there's an untapped workforce there.
In international news now, Sean, Warren Buffett's Berkshire Hathaway sold billions of dollars of US shares in the first 3 months and bought very few.
Anything the so-called Oracle of Omaha does when investing is noteworthy. So the fact that Berkshire Hathaway sold $13.3 billion US in the 3 months to the end of March is significant. You know, his company is now sitting on $131 billion US worth of cash, just basically waiting for a rainy day, right time to invest, that sort of thing.
That is extraordinary. Once again, gobsmacked.
Gobsmacked, fair enough. In fact, $130 billion, I think BHP's worth more than $130 billion, but Commonwealth Bank, I don't think is. So there you go. Over the weekend was the Berkshire Hathaway annual shareholder meeting. Buffett was his frank self, who was asked about Elon Musk. He basically said he overestimates himself. He did say he also said that he thinks earnings will decline in many companies this year.
Did you really say that about Elon Musk?
Yeah, he thinks he overestimates himself.
Wouldn't it? Just imagine being Warren Buffett, and you just say what you think, wouldn't you?
Yeah.
You wouldn't kind of care what anybody thinks.
Yeah, and it's true. But he has done that for a long time though. That's why it's been so much fun.
Now, airfares, Sean, one of my favourite topics, are rising at more than twice the rate of inflation as airlines cash in on surging demand for travel that has defied broader economic headwinds.
Average ticket prices on more than 600 of the world's most popular routes rose at an annual rate of 27% in February. That's the latest month that there's data available. It's the 15th consecutive month of double-digit growth. Now, that's according to the Financial Times analysis of data from aviation company Cirium. 27.4%. That's about 3 times the level of inflation. And people are paying for it, Michael. Happy to.
Okay, now up next is the Fear and Greed Daily interview, and today, Sean, you're speaking with Matthew Kidman from Centennial Asset Management.
Any investor should be listening to this one. Matthew's a great one to talk about investing. We talk about banks, we talk about investing when the rate cycle's peaking, all sorts of things. Well worth a listen.
Yeah, it's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And of course, it is Monday, which means there is a new episode of Fear and Greed the week ahead with Stephen Koukoulas, who is positively beside himself with excitement at tomorrow night's budget.
He is absolutely beside himself. He's fired up. I'm sure that this week is kind of one of the highlights of his year, Stephen. And he also does a lot of media in that as well. So he's ready, very ready for it.
He's really quite the celebrity in Budget Week, isn't he?
He is. I mean, he's a celebrity, full stop, as far as I'm concerned. The kook.
We're lucky to have him.
That's right. Very lucky.
Yeah, definitely worth a listen as well. Thank you very much, Sean.
Thanks, Michael.
It's Monday, the 8th of May, 2023. Make sure you're following the podcast. Join us online on LinkedIn, on Instagram and Twitter and Facebook, pretty much everywhere. Make sure you stay up to date as well on all the business news with Alexa and your Amazon Echo smart speaker. Simply say, Alexa, play the Fear and Greed podcast to catch the latest episode, and you can grab yours now at amazon.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.